Hello, everybody. Welcome to Income Investors. My name is John Whitefoot, and with me today is Mo Zulfiqar with a quick economic update. Our goal with these videos is not to tell you what to buy or sell, but rather inform you with what's happening. And if you want to read more about what Income Investors is all about, head to incomeinvestors.com. You can find a link to the website in the description below. So let's get started. Mo, what have you got for us today?
John, today I want to talk about outlook for the stock market and few risks that shouldn't be ignored.
Okay, so what are you seeing?
Remember, stock market at the end of the day is a function of how earnings will look. If expectations are rosy, stock market rallies. If investors are pessimistic about future, you see a stock market crash. As it stands, the financial performance of companies traded on the stock market has been great. And if you look at analysts, they say outlook is shiny. For some perspective, consider this. In the first quarter of 2024, with 98% of S&P 500 companies already reported, the earnings growth rate was 5.9%. This is the highest year-over-year earnings growth rate by the S&P 500 companies since the first quarter of 2022. And this growth rate is well above what analysts were projecting at the end of first quarter of around 3.4%. Now, you may ask what's ahead? During the month of April and May, Wall Street analysts got more optimistic, and they now forecast that earnings growth for S&P 500 companies for the second quarter of 2024 is going to be around 9.2%. For the third quarter of 2023, earnings growth is expected to be around 8.3%. For the third quarter of 2024, earnings growth is expected to be 8.3%. And the fourth quarter is expected to be around 17.5%. For the entire year of 2024, S&P 500 companies are projected to report earnings growth of 11.3% and 14.2% in 2025. So all in all, earnings estimates are looking great. And this could tell us that stock market could continue to trend higher.
And this is, of course, all great news.
Surely, estimates and forecasts are rosy, but there are 5 risks that I think shouldn't be ignored here.
Oh, okay. And what are these 5 risks?
Let's begin with the first risk, and it's the interest rate. At the beginning of 2024, it was widely expected that the Federal Reserve will cut its benchmark interest rates by 6 times. Now, it is expected that it will only cut maybe 2 times. Some even say there may not be any cuts this year. Know this, volatility in interest rate has direct consequences for companies that have higher debt, and it could impact their profitability. You know, we talk about REITs here often. Consider what happens to REITs profitability if the interest rates don't change or even go higher.
Oh, well, that's interesting. Now, what about the second risk?
Now, for the second risk, I want to talk about economy here. Some of the leading indicators of the US economy are starting to suggest that the economy is not as strong as it was a few quarters ago. And, you know, weak economy generally translates into slower earning growth. Now, you have to ask, what happens if things get worse? If things get worse, it could mean earnings decline. And remember, if earnings decline, investors don't take it very lightly, and you see a rigorous sell-off on the stock market.
And sorry, the third risk.
Third risk is the global economy. I think it's also very important to understand that there are problems in the global economy, and they continue to persist. Major economic hubs are struggling to grow. Since companies traded on the stock market here have global operations, slowing global economy could mean lower revenues and ultimately lower profits.
And fourth risk investors should be aware of.
The fourth risk would be some sort of a liquidity event. And I know this is not in play right now, but I think it's worth keeping an eye out. In early 2023, the financial system handled the failure of a few regional banks very well. However, with interest rates high and expected to remain high for years to come, there could be some event where we see even more bank failures. And I think it's possible. And events like bank failures dry out liquidity from the financial markets. And when liquidity runs out, investors sell stocks to raise cash for their portfolios.
And sorry, the last risk.
And this is a very simple one. You see, absolutely nothing has to go wrong. But if investors as a whole decide to take profits, because stock market has done really well over the past few years, if profit taking takes place, it could change the direction of the stock market.
Thanks, Mo, for your insights. If you want to check out what Income Investors is all about, you can find the link to our website in the description below. While you're there, you could sign up for our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. We will be back with income picks soon, so stay tuned and don't forget to like the video and subscribe to our channel. Goodbye for now.